right, let's go ahead and get started. My name is Teddy Nykel. I'm going to be the moderator this evening as well as one of our speakers. You can see we have 3 other speakers here tonight, and I'm going to introduce them in just a moment. But first, I want to give a little bit more information about what we're doing here tonight. So, as the name of this presentation suggests, we're going to be going behind the scenes, kind of peeling back the curtain on financial aid, showing you kind of how the sausage gets made, how colleges figure out how much financial aid students qualify for. And why that's important is because knowing how that works can kind of inform the strategies that you take as students and parents. And I know we might have some high school counselors in the audience this evening. So knowing kind of that background information of how it all works is going to help inform the decisions that you're making or that you're recommending to students. So we're going to kind of have a Q&A back and forth kind of format this evening. So all 4 of our panelists are going to be in conversation with each other, shooting questions at each other. And we all have different specialties. So I'm going to introduce everyone in just a moment. But first, I'll go ahead and introduce myself. My name is Teddy Nykel, as I mentioned, and my background is in student loans. I'm a journalist who spent more than 6 years covering personal finance with a specialty in student loans. So if anyone has student loan related questions, I'm happy to take them. You may have seen my writing in the Associated Press or USA Today, and I'm also involved with my college planning team as our marketing director. Before I go ahead and introduce our other panelists, I actually want to get a sense of who we have in the audience here tonight. So if you're a parent, I'm going to go ahead and launch a poll. You should be able to see it now. Please tell us what grade your child is in, or if you have multiple children, you should be able to select more than one. We want to get a sense of if you're in middle school, which is great. We actually always say middle school is the perfect time to start thinking about these things. Or maybe you already have a student in college, maybe you have some kids in high school. So let's see what we have. I'm gonna close the poll, give people just 2 more minutes to answer. And of course, everything we're gonna touch on tonight will be relevant for whatever grade level we have. It looks like we have, hopefully everyone can see the poll results now. We have some freshmen, juniors, and seniors in high school. So obviously everything tonight is going to be relevant, but it's just kind of helpful and interesting for us to know where everyone's coming from. So thank you very much. My college planning team, just to give you a quick intro, and then I promise we're going to get to the panelists and get to the questions. My college planning team is a group of financial and academic professionals. So that's how we like to kind of stand out. There's so much information about college, but how we approach it is from both the academic side and the financial side. Those 2 things both need to be taken care of in order to choose the right college for you or your student so that they're going to be successful, but also figure out a plan to pay for it. You can't really have one without the other. If you have a great college, but you're going to be in tons of debt because of it, is it really worth it? So we try to tackle both sides of that equation. We work with families to help them develop strategies to find their best fit college at the lowest possible price. We tackle a lot of income, asset, borrowing, tax strategies on a one-to-one basis. But tonight we're going to be sharing some of the strategies that can apply to a larger audience. Obviously, a lot of the strategies that we talk about with clients are very specific to their situation, but we're going to try to share some of those high-level learnings that any family can benefit from. But because a lot of the strategies are very specific to a family situation, every family's financial situation is different. I'm sure you're going to have a lot of questions that are pretty specific to your situation. So while we are taking questions tonight in the chat, at the bottom of your screen, you should see a button that says chat, and it should pop up. Feel free to put questions in there throughout the presentation. We're going to address them at the end of the presentation. But if you have questions that are more specific to your situation or questions that you don't feel comfortable asking in an online forum, we totally understand. So as a way of adjusting right now to the coronavirus, when normally we would meet with people in person and they would feel more comfortable asking questions, right now we're offering the opportunity for you to follow up with us on the phone. It's free. You can talk for 15 minutes with one of our panelists and get all your questions answered over the phone in the next week or so, whenever you want to schedule it. So I'm going to share more information about how to schedule that at the end of the presentation. In addition to that, we're also offering the opportunity to meet for 1 hour free with our founder, and he will like review your family situation, make some personalized recommendations, and kind of give you even more of a deep dive into your specific situation. So by being here tonight, you're eligible for both of those opportunities. I think we are now finally ready to get started. I'm gonna go ahead and introduce our panelists. So first we have Billy Joe Weiss. Billy Joe, give us a little wave. Billy Joe is one of our financial aid specialists. She is a financial aid expert with a background in accounting, and also she has a CPA background with more than 20 years of experience in accounting and finance. She heads our client service team, and so what that means is she works one-on-one with clients, parents, and families to develop their strategies for how to pay for college. She's also been published writing about financial aid topics in Collegiate Parent, which is an industry publication. Next up, we have Matt Grzetich. Matt is a financial aid expert who has worked at 3 different Illinois universities, so he kind of gives some of that behind the scenes insights because he's been on the other side working for a college. And he has more than 15 years of experience helping students and families. He specializes in the financial aid process, federal financial aid, the FAFSA, the appeals process, and he's also written about these topics in Collegiate Parent, as well as Link for Counselors, which is an industry publication for college counselors. And he also is a client service manager with my college planning team. So in addition to his work with universities, he works with clients as well to develop those strategies, just like Billy Joe does. And finally, we have Shane Cole here tonight. Shane is kind of representing the academic side of things, because as I mentioned, we like to cover both financial and academic. Shane is an award-winning college and scholarship counselor at one of the largest, most diverse high schools in Illinois, and he has more than 25 years of experience helping students and families navigate the college application process, the scholarship process, and a little bit on the financial aid side as well. He has also been published writing about financial aid in those publications that I just mentioned, as well as the Wall Street Journal, so that was really exciting for us. And on the side, in addition to his full-time work as a college counselor, he works with my college planning team and helps us develop our partnerships. We normally host in-person workshops at libraries and park districts and high schools, so he helps kind of foster those relationships. So I think we're gonna get started with a topic that's on everyone's mind these days, which is the coronavirus. There's so many things in the news about the coronavirus, how it's gonna affect college. And I think one of the biggest questions that is ever changing day to day, but Shane, let's hear from you on where we're at right now with it, is are colleges gonna be open this fall?
I think that the momentum is building towards opening, definitely. Despite last week's announcement by the California state system that they were not going to be having students on campus, there has been some announcements as early as the 19th. Just on the 19th, the Los Angeles Times mentioned, and I also heard on the radio, that several universities, some in the Midwest, Notre Dame is going to have students on campus. Creighton University is going to have students on campus. Rice University in Texas will have students on campus in the fall. And I think that that momentum is definitely building. The colleges need the money is what it boils down to. And online learning for them is not going to help them pay the bills. I did hear from another friend of mine just recently, Calvin College in Grand Rapids, Michigan, so kind of locally. I think the schools that are in smaller population hubs are going to have an easier time opening as compared to some of the schools in the Cal State system, and as opposed to a place maybe like DePaul or Loyola, where with urban settings, it just may not be that easy to open. So I do think they're going to open. And then there's also a really great website called Inside Higher Ed. Just go on the website, Inside Higher Ed, and they are giving all the latest information from post-secondary institutions about opening, what's the latest trends in higher education.
Great, thanks, Shane.
Sure.
I think we've heard even if colleges are going to be opening, it's going to be different. They might be closing before Thanksgiving to try to bring students home before there's potentially another surge in cases. Maybe they'll have more social distancing in classes, or athletics won't be quite the same. So it's definitely probably going to be a different feel this fall than normal college. So I think that's causing people to wonder, is this a good time to take a year off and maybe take a gap year, come back the following year when things are a little bit more back to normal? What are your thoughts on gap years?
I don't like it. I'll be honest with you, I don't like it. But this may be a year where a gap year could really work. I just feel like with good students, they've built this momentum from high school and they're getting ready to carry it on to the next level. So I think that they should continue if they can. That's very easy to say. Don't take a gap year, just get started right away with school. I have a senior who's going to graduate, going to be attending Hope College in the fall. We actually had a discussion about 3 weeks ago. Hey, maybe we don't go back for the fall semester. Maybe we stay and work, go back for the spring semester. So if you are going to do that, there are some things that you can do or your child can do to kind of make things worthwhile. For one thing, can they get some work experience in a field that they are considering? I think that's a really great idea. They're going to be able to save some money. The other thing that they could potentially do is take classes at a junior college to receive some credits and then transfer those credits in. You do have to be careful with that. It may do a couple of things. You have to be careful of a couple of things. Make sure that the credits are going to transfer from the community college, junior college level into the university that you are going to be attending. Transferology is a website that tells you exactly what credits are going to transfer from what class into what college and how much credit you're going to receive. So be smart about the credits that transfer. And then the other thing that you need to be careful of, if you take too many credits at the junior college level, will it affect your merit package when you then return to the school, whether it be that spring or the following fall? So you have to communicate not only with the community college if you're going to be going there, you also have to be communicating with the admissions department of the school that you're planning to go to.
Okay, thanks, Shane. Matt, I have a question for you. What would families do if they've already filled out the FAFSA, but their financial situation has changed due to the coronavirus? Will there be more aid available?
Yeah, so that's a good question. It's kind of a twofold question. So if you're currently already in school and you've got a child that's already attending college, then there are some opportunities there. So the CARES Act that was recently passed does provide some emergency relief funding for federal aid for students who have been disrupted by this, who are already taking classes. So the problem with this one is, and it's not really a problem, it's just kind of more hoops to jump through. You can't really just go to the Department of Education and say, I want to apply for these funds. Essentially, you have to go through your school, apply through the universities and say, here's my situation, here's how it's been disrupted. The school can then see if they can get any additional grants or any additional distributions to the student to help cover some of those costs. So that's something for our students that are currently in the process. For those that are just getting started, the one thing that we'll talk about is appeals. This is one of the big things that you can really use as a tool when filling out your FAFSA. They're going to be looking at 2-year-old tax information. So, I mean, how much has changed in 2 years? How much has changed in the last 2 months? So it's amazing what they need to be looking at. So you can apply to the school and say, hey, that was what my financial situation looked like 2 years ago. Here's what it looks like now. And then that university and the financial aid office can take a look at it and say, all right, let's look at this and we can adjust your FAFSA accordingly. So those are the 2 avenues that you'd have available to you if there have been any changes due to COVID-19.
Okay, thanks, Matt. Yeah, we're going to be talking about the appeals process more later in the presentation. I want to take a break for a second from COVID-related things, although I'm sure it'll come up throughout tonight's presentation because it's on everyone's minds. Let's just take a moment and get back to the basics, especially for some people in the audience here who have freshmen tonight. So maybe they're a little before the college application process, but they're getting ready to think about it. So Shane, what are some of the things that students should think about when they're choosing a right college for them? We see a lot of clients who come in and it seems like they chose the college because of the name recognition or their friends were going there, or maybe not the best reason. So what are some of the reasons that you advise people to choose colleges for, and what are some of the factors to consider?
Great question. Two things not to consider. Don't look at the mascot if it's a cool mascot, and don't look at the fact that the bumper sticker is going to look really good on the back of your car. So we want to eliminate those two things. Ultimately, what everybody wants to do, parent, people that work at the school, and your child, we want to make sure that we get the right fit. Academic fit, financial fit. We don't want to get the right academic fit if we can't pay for it or if we're going into debt. Or if it's a cheaper school or we get a really great package to go there and then we get buried academically because it's too hard. It's like buying a mattress. You want it to be the right fit. It's got to be the right fit for you. So I always give the example of the University of Illinois at Urbana-Champaign. That is a really great school. They have really a lot of great programs. Engineering, obviously, their business is really good. Their computer science is really good. Not every kid that's good at math and science belongs in their engineering program. It will chew you up and spit you out, and it'll be a bad situation that your student goes into. They don't survive the program. They have to transfer. Now you're looking at a fifth year, or they're getting a degree that they didn't want to get in the first place. So we want to make sure that we get that academic fit right, and then also the financial fit. So again, another cost saving is as we're looking for schools academically, can we get done in 4 years? Or in some cases, can we get done in less than 4 years? We also want to, I always tell the kids on my caseload, forget about the mascot and the sticker. Are you in the top 25% or in the top 20% of kids coming in based upon your grade point average and your standardized test scores, whether that be ACT or SAT? If you can be in the top 20%, those schools are going to do a couple of things for you. They're probably going to give you merit money, free money that you don't have to pay back. And they are also going to probably give you a chance to get into their honors program. The honors program is going to afford a lot of opportunities of registering early, first crack at research, first crack at internships. So we want to make sure that if we are in that top 20%, we are in pretty good shape. It's really easy to find. Go to this individual school website, and in the search bar, type in freshman profile. It will probably kick to you a certain portion of the student population, what their average GPA and ACT score is. So we want to make sure that that's one way that we account for some affordability. And then lastly, transferring in with credits before we even attend, whether that again be through junior college credits, community college credits, or through dual credit at the high school level, or advanced placement, international baccalaureate credits, CLEP credits, those types of things where we can come in and be on campus with credits in our pocket before we even start.
Okay, Shane, I have a question about merit. A lot of my parents want to optimize their merit scholarship, and I actually see a question on the chat right now asking about merit. Can you explain exactly what that means, and how do you go about choosing a college that's going to be the most generous with merit scholarships?
Like I mentioned earlier, with merit and scholarships. Scholarships is a little bit different than merit, and I'll touch on that in a little bit. So to maximize your merit, you have to choose the right school first, where you might be in the top 20% based upon grade point average and standardized test scores. So look for those schools. A lot of schools will post right on their website. I'll use the University of Iowa, for example. Based upon your GPA and your standardized test score, if you plug those numbers in on the University of Iowa website, they will tell you how much scholarship money that you're going to receive, merit money that you're going to receive from the university before you even apply. So the resources are out there for you. You do have to search a little bit. One of the other things that I encourage my students to do, if they can afford it, is a little bit of ACT or SAT tutoring goes a really long ways when it comes to merit. I'm going to use myself as a personal example. I have a daughter who just graduated. At the end of her sophomore year, she took a standardized test score right at the beginning of summer. So she took a standardized test score, she took the ACT. We did some tutoring in November, late October, most of November. She took the ACT again in December. The difference between those two scores was $8,000 per year, and we spent about $500 on tutoring. So that $500 investment turned into a $32,000 merit package that was given to her by the university that she chose to go to. So, and then lastly, I will mention very quickly, scholarships. For everybody on here, I noticed the difference, freshmen, sophomore, juniors, and seniors of the people on the panel. It's not too late for seniors to sign up for a scholarship through fastweb.com. You type in your information, it will give you scholarship information that your student is eligible for based upon the profile that they put onto the computer. Also, another good place to search for scholarships, high school guidance webpage, local chamber of commerce, your church, your union. If you're a member of the union, go ahead and apply for those scholarships. So many of these scholarships go unfilled. A lot of universities say that sometimes like 25% of their scholarships, nobody ever even applies for. That also goes sometimes to the scholarship department, like the scholarship departments at a guidance office. Just like the lottery, you have to play the scholarship game in order to win. Like a lottery ticket, I got no chance of winning the lottery if I don't buy a ticket.
That's always so surprising to me to hear that all the scholarships
Crazy.
aren't always filled, because I know everyone obviously wants them.
It's crazy because one of the largest questions I get at school is about, hey, how am I going to pay for this? And I ask them, did your kid apply for this scholarship? No, they didn't know. Oh, well, $1,000 is $1,000. To me, that's a lot of money. And that buys books and fees for 2 semesters. So the kids don't think they're going to win, so they don't apply.
Yeah, that's a great point. We try to keep people updated on upcoming scholarship deadlines. We just shared a article with May scholarship deadlines in our newsletter, so recommend signing up for our newsletter. I can also try to find it and put it in the chat now. But Shane, speaking of test scores, it seems like every day ACT, SAT are getting canceled or pushed back again and again. Can you update us on where we are with when is the next test date? And also, should students and parents be concerned if they're not able to take these tests right now?
Well, the most recent test dates got canceled, just like you said. They did. SAT and ACT did get canceled. There will be an opportunity for a July ACT. I don't know right now if it's going to be go to a school, sit down with 20 other people in a room. I think it is going to be less kids, and less kids are going to be available, not only for the ACT, but also the SAT. So there will be, I believe it's July 13th will be the ACT. You can go to actstudent.org and find out exactly what the date is. But the SAT did get pushed back to the end of August, and those dates are on collegeboard.com, so you can find those dates there. The state SAT will not be made up, so if you have a junior this year that is going to be a senior, they will not, the great state of Illinois will not be offering that SAT anymore. And then Teddy, you had a second part of that question again, I'm sorry.
Yeah, so should people be concerned if they can't take the ACT in time to apply for college or on the same timeline that they planned?
I knew you had a great question. This is really interesting. This is so weird after doing this for 24 years and telling everybody you have to take an ACT, you have to take an SAT. You may not next year. The general trend over the last 10 years is more and more schools have been going on board with this test optional, where maybe you don't have to submit a test score, or if you don't want to because you think your GPA is better than your ACT or SAT score shows, that they're going to take you based upon the classes that you took in high school and how well you did on those. That is especially going to be the trend this year, because I probably get 2 or 3 emails every day on my school email that says another school is going to be test optional in the fall, and it also may not affect merit money in the fall.
Okay, great. Thanks, Shane. But if it's test optional, are you suggesting, what's your recommendation? Try to take the test anyway, or just go with your GPA?
I say take the test anyways. I think it can only help you when it comes to merit money, but that doesn't mean that you have to submit the test score if you don't want to.
Okay. Another factor to consider when choosing a college has to be the financial health of the college. And I know many colleges and universities were struggling before the pandemic, and now they're even worse off. Matt, how can families find out if a particular school is financially strong?
Well, the answer to that is that it's not easy. To determine some of these things, it takes a little bit of research on your end. But recently, Forbes did have an article on listing and rating private colleges based off their health that was recently released. So I think that's a really great tool if you're looking at private schools. You can use tools like that kind of go through their methodology of how they're rating these schools, and what they were doing is really taking a look at the enrollment prior to the COVID-19 pandemic that's going through. They'll be looking at it and saying, was this school struggling for enrollments? What's their endowments looking like? Were there any issues with these beforehand? Because if there were issues beforehand, there's definitely going to be issues now with that happening. And I think we can take that same logic and apply it to public schools and use that same line of thinking. But really want to look at, was enrollment going up before this, or was enrollment on the downtick? Were they looking at anything? Were there tuition freezes? Were there anything that would kind of suggest that maybe they're struggling a little bit? So those are the things that I would look out for when determining the health of these schools and if they're going to be around for those 4 years to have your child graduate.
Okay, great, thanks. I have another question. I have a lot of families that make over 100,000 a year, and many of them think they don't have to fill out the FAFSA. What is the advice that you give to those income type families?
Yeah, the biggest thing that I would always say is that you want to fill out the FAFSA. It's called the Free Application for Federal Student Aid, right? The key word here is free. So what you want to be looking at is, you might hear that a lot, and I hear the same thing. Like, I don't qualify for anything. But what they're not talking about is some of the things that they do qualify. So they might not be qualifying for these need-based aids. So Pell grants, SEOG grants, MAP grants, things that you don't have to pay back. So the family that's making that 100,000, they're not going to be eligible for those things. But what they can be eligible for are going to be work study, federal direct Stafford loans for their student, and then also the Parent Plus loan. So these are, again, just additional tools that if you don't fill out the FAFSA, you're not going to be eligible for them. So taking student loans, for example, every student is going to be eligible for some student loans regardless of what their EFC is, or regardless what their FAFSA says. So they do have those options to take those student loans out. And student loans are one of those things that we actually do recommend, because it gives students a little skin in the game, gives them a little bit more of a realistic feel of, okay, I'm on the hook for this too. I'm not just out here on, mom and dad's dime and making the best of it. This gives them more of an opportunity to feel as though they're part of the process. So again, it's free, so we always recommend filling out that FAFSA.
Matt, while we're on the topic of need-based aid, Shane already kind of covered some information about merit-based aid. Let's dive deeper into need-based aid. Can you explain how colleges determine how much need-based aid students qualify for?
Yep, and so it's a really simple formula with a lot of moving pieces. So they're looking at your COA, or cost of attendance, and I kind of want to pause on that because this is one of those things, and I'm trying to take you a little bit behind the scenes here, so giving you some tips on things to look out for when you get to this number. Cost of attendance is actually a legal definition. So when they list down cost of attendance, they're legally required to not only include tuition, room, and board, but also books, mandatory fees, transportation cost estimates, and as well as an estimate of student personal expenses. So the one thing I always say with this is you got to watch out. So your award letters will sometimes say COA on there, but sometimes they won't. Sometimes they're going to use terms like direct expenses. So these award letters aren't really telling you the whole story. So you're not going to know what the actual out the door cost might be. So really look for that cost of attendance, or COA. So now that we got that kind of out of the way, you take your COA, cost of attendance, minus your EFC, which is when you fill out your FAFSA, it takes in your income, your assets, all of those things, and then it kicks out an expected family contribution. So if you take your cost of attendance minus your EFC, that is going to make your financial need. So quick example of that is if you have a college's cost of attendance that's $50,000 and your EFC is $30,000, you now have $20,000 of demonstrated financial need. So basically, the EFC, that's what you're already on the hook for. No matter what, that's what you're responsible for. But after that, you do have a little bit of additional things. So that $20,000 of demonstrated financial need, that's what we're looking to have the college cover a little bit.
Okay, great. But isn't some of this done behind the scenes? In other words, aren't there other factors that play into it?
Yeah, and that's where we can take a look at the role of how they're filling those things. So we don't want to pay full boat, right? We don't want to pay the EFC as well as that demonstrated financial need. We want to see how the college can help us in filling that demonstrated financial need. So a couple of different ways that they can fill it out is with these items here. So gift aid in terms of grants, tuition discounts, and scholarships, those are the things that you're looking for, right? Those are gift aids. Those are things you don't have to pay back. So you're going to see a lot of schools will kind of promote this, right? They'll fill 70% of your need. Other one will be 40% of your demonstrated financial need. But it's really a matter of how they fill it, right? Gift aid is one way. The other way that they can fill that is with self-help aid. And self-help aid is basically taking out loans to cover those costs. So that's really not helping you a whole lot when it comes down to it. But to kind of show you an example of how this works, I'm going to show you 3 college reports that we had put together here. So we have this this family that we made here just kind of as an example for these pieces. But what we're looking at here is a family that's got a household income of $100,000, so I should say adjusted gross income. They also have $200,000 in investment real estate, and then they have $30,000 in a student savings account. So what I'm trying to show you here is, how can we reduce those EFCs? What are some strategies? And then also, it's not just as simple as reducing that EFC. It's trying to figure out how some of these gift aids go with it. So this is just a sample family. So if we take all the information that we have as is and put it into the FAFSA, you're going to get the before. So underneath estimated EFC, it says 29,885. So with all that information put in, that's what they're saying you are expecting to pay for college. Now, if we take a couple of changes and do just a few things using these strategies to help us, we can help reduce that EFC. So if we take this same $200,000 investment real estate, so they've got $200,000 of equity built up in this investment real estate. If we do what's legally required to have that formally recognized as a business, then that will no longer be part of your FAFSA calculations because your FAFSA does not ask you about small business values. So if we're able to do what's legally required, we can remove that from the equation. The other thing is if we take that $30,000 in a student savings account and we move that into the parent savings account, we're going to save ourselves a lot of money. The reason for that is that student savings accounts and parent savings accounts are looked at differently. So a student savings account is going to be assessed at 20 to 25% versus a parent savings account, which is going to be assessed at 5.64%. So right off the top, by moving those funds from one account to the other, you've saved yourself almost 15%. So looking at this after column, if we see that we make those changes, you can see the EFC gets reduced to 21,232. So $8,000 in savings almost right off the bat, just for doing those 2 things that are, within your easy changes to make to kind of help reduce those EFCs. All right, but you're probably saying to yourself, great, Matt, awesome. We figured out, we got two strategies. That'll be great. But unfortunately, it's not that simple. So I wanted to use 3 schools as an example to show you cost isn't always what it's cracked up to be, right? You can look at that sticker price and get scared off. And you might look at some of them and say, hey, that's affordable. But you really kind of have to, peel layers back to try and figure out some of this part. So I'm looking at Clarion University here from Pennsylvania, right? So we use this one. Why? Because a few years ago, they reduced their cost of attendance, and that was their big selling point, right? So they're the inexpensive option. And if you look at it, cost of attendance is $32,233. So not bad, seems pretty affordable. But Shane touched on it a little bit earlier. Look at this graduation rate. There's big red flags here. Their 4-year graduation rate is 26%. So they might be less expensive, but odds are you're not getting out in 4 years, and it's going to cost you more money in the long run. And then you look at that 6-year graduation rate is at 52%. So that's pretty rough. So those are 2 red flags there. If we move down here just a little bit to this chart, this is basically what of that demonstrated financial need that we talked about, what they're going to fill. So their average need that they're going to be meeting is about 51%. And of that 51%, only 37% of that is going to be gift aid. So again, gift aid meaning the things you don't have to pay back. So if we go over here to this total family contribution in the after column, $26,622. So you're looking at that and saying, okay, it's still not that bad. But let's compare that here. So I want to compare this one to Bradley University. This is the exact same family, the exact same situation, but you can look up here and see that the cost of attendance is quite a bit more, right? Almost $50,000 for that cost of attendance. However, look at that graduation rate. 54% are graduating in 4 years. So odds are you're going to be able to get out of there in 4 years, which is going to save you money in the long run. Also, they're very generous in terms of what they've got for gift aid, right? So they are going to fill 73% of the average demonstrated financial need. And of that 73% they fill, 71% is gift aid. Again, those are the things you don't have to pay back. So if we take a look at the after column for the total family contribution, $28,726. So you're thinking to yourself, Matt, you obviously don't know how to do math, but it's true. It's just a matter of the way they're applying these things. So Clarion University, which is almost $20,000 less expensive than Bradley University, it's only going to cost you $2,000 more to go to Bradley based off of the way they're giving out that gift aid and the way that they're distributing it. So I'm using that as an example to say, hey, don't just get scared off by the sticker price. Really take a look and know what those things mean. The last example I'm going to give you is Northwestern University. And you're looking at this cost of attendance and you're like, oh, Matt, you're out of your mind for even showing me this, right? $80,000, that's crazy. But you can see 86% are graduating within 4 years, right? Obviously, this is one of more of elite schools, right? They're having some of the best go there, so they're graduating on time. But I use this as an example because I want you to look at this. They're filling, on average, 90% or 100% of that need is being met. Of that, 90% of that is going to be gift aid, right? They're really wanting to get those students in the door. They're wanting to get the best of the best. And so if we actually go over here to total family contribution, it's actually $16,921. That's what you're responsible for paying. So I bring these up as examples because I don't want you to say, oh, we can't afford that school. Let's take that one off the table. Really dive in, finding out how you can determine whether or not you will be able to afford it based off of how are they giving out that gift aid, how is it being offered, what are some of those scenarios. So those are just a couple of examples that can kind of help you with that. And these are those things that during that 1 hour Q&A that you're available to, if you bring some of your personal information along with you, we can actually provide 3 of these for you so you can break it down and see how this would be kind of tailored to your style as well.
Matt, that blew my mind when I saw these reports the first time. Like, I never knew any of this when I was going to college, and it's crazy to think that colleges vary so differently in how they handle all of this. I know it's a lot to wrap your head around. Like, you have to really study these numbers to kind of really understand what's going on here. So I'm going to send out PDFs of all 3 of these via email after this, so you can take a closer look and try to digest a little more. And if you have questions, sign up for the free Q&A phone session that we're offering, or as Matt mentioned, sign up for the 1 hour free conference with our founder where he'll actually walk you through one with your own colleges that you want and your own numbers. So I highly recommend that. But Matt, I know that unfortunately it gets even a little more complicated because there are 2 different methodologies that colleges use to calculate EFC. So tell us about that.
Yeah, so it's not even just as easy as, fill out your FAFSA and break down these numbers and know all of these other percentages and all the other nonsense that I just went over, right? It gets a little bit more difficult than that. So there's two different methodologies that will be used by the school. So first is the federal methodology, which is the most common. So this one's going to be used at the majority of schools. So in the examples I just showed, Bradley and Clarion, they use the federal methodology. The other one is going to be the institutional methodology. This one is used at more of your elite schools like Northwestern that I showed you. The reason that I bring it up and why is there a difference, right? It matters on what they're looking at, because if you're going to try to implement some strategies to help reduce that overall EFC, you have to know which methodology your students are going to be using. So one thing will help in one area, one will not. So for example, the federal methodology does not consider non-custodial parent assets. It does not assess small business value like we just talked about. So if you do what's legally required and make that part of your business, they're not going to include that on those questions. It also does not assess any home equity that you might have. And finally, it does not assess sibling assets, which you might say to yourself, Matt, are you insane? Why would anyone worry about sibling assets? Well, there's a reason for it, and it's coming up, and we'll talk about it in just a minute. And there also is some student income protection allowance. So your student is able to make up to $6,667 per year without it impacting the FAFSA and then going into negatively impact that EFC. Now, the institutional methodology, basically just throw everything out that I just said, because it kind of does what it wants. So it may assess non-custodial parent assets. Home equity is often assessed. Sibling assets are assessed. Any business value that you'd have is also assessed, and there is no student income protection allowance. So every dollar that the student earns goes directly on that FAFSA. So I'm not trying to say one's better than the other. There's different. And unfortunately, you're looking at some of these terms that I'm using. You're like, is, often, may. It's like, give me an answer, Matt. But I don't have one for you, because all of the institutional methodologies can look and pick and choose what they want to look at. So you might have two institutional methodology schools that look at different things. So it's really up to the school. So it's really difficult. But once you know which one you're going for or which methodology the schools are using, you can kind of figure out which one of these strategies might help the most. So just a quick example, if you're using federal methodology, you might say, oh, I can pay down home equity. So any assets that I might have, we can put it into the home, and then they won't necessarily be showing on the FAFSA. That will work for the federal methodology. However, on the institutional methodology, they will assess that home equity, or I should say, they may assess that home equity. So you may have just gone through things and moved funding around and paid things down. That isn't really going to be helping you in the long run. So you just really want to make sure you know which one you're looking at.
Matt, when the parents talk to the financial aid office, when they visit either in person or virtually, should they come with a lot of questions?
Yes, absolutely. So there's nothing I love more than when I'm on campus and someone's on a tour and they're coming with some questions for me. The reason is some of the things that I've already talked about here, right? So you're not going to be able, that you might be able to find some of these numbers like, what percentage of demonstrated financial need are they going to fill for you? But what they're often not going to tell you, unless you go in and ask, is exactly how they're going to fill that demonstrated financial need. So are they going to be giving any sort of gift aid that's going to be helping reduce those costs? Or is it all just going to be student loans and Parent Plus loans? That doesn't really help you a whole lot in the end. So that's the key, is to determine how they're filling that need and making sure that you're doing that so you can maximize that against other schools, right? So you can take that and shop that information saying, hey, they're filling this amount. Can you do better as long as you're comparing an apples to apples school? So it gives you a little bit of an option to kind of go through and say, does this work for me? Does it not work for me? And really give you an idea of what they're going to be applying and how they apply it. So unless you ask, they're not always going to be, they're not hiding the information from you. But if you don't ask for it, they're not going to be willingly giving it up sometimes.
Matt, why don't more people know about these strategies? Is this information that is readily available? Are they getting it from their high school guidance counselors?
Yeah, I think that's more of a question for Shane. So I think our counselors do a great job of trying to get kids to understand what is the best fit. Kind of went through all of those things, but I'll get a lot of students that come into my office and they can tell me 100 reasons why they chose our school and for the correct reasons. But then I say, great, how are we going to pay for it? And I kind of get this blank stare. Shane, is this something that you guys at the high school counselor level go over with them at all?
No, no, no. Uh, we don't really even get the training for this, to be honest with you. We didn't have it in our undergraduate unless we were business majors, and then when you go into a guidance master's program, you don't receive any of the financial aid training. You get a little bit of academic training, but not much of that either. It's more social emotional training. So this is kind of learn as you go along through the business, the financial aid part of it. You start to get comfortable with the FAFSA, helping parents with that, getting people in that can help your parents with the FAFSA. But when it comes to saving in a student's name versus saving in a parent's name, I learned that through working with my college planning teams because we just don't receive that training.
No, I think that's a good point too, Shane. So I feel like a lot of students come into the financial aid office and they'll ask me about classes or advice on a class, or should I take this one? And I kind of like, hey, I don't know, right? All I know is these numbers here in front of me. I can tell you if you can afford to take that class, but whether it's a good fit for you or not isn't that. So I think even at the high school level, and then even more so when you get into the college and university level, it's very siloed, and you kind of have to make sure that you and the student are staying on top of those things, so they're aware of all the ramifications and making those right choices.
Matt, with the lack of knowledge about how all this works and it's a little bit complicated, I imagine parents are making a lot of mistakes. And I happen to know there are often many mistakes. Can you go over what some of the most common mistakes are when it comes to saving for and paying for college?
Yeah. So like I said, we've just gone over all of these weird formulas and numbers and acronyms. You'll find out that financial aid loves acronyms, really, because it just confuses people and makes the financial aid office sound really smart. But a couple of the biggest mistakes that I see, the first one is going to be saving in a child's name. We used it in the example earlier. Grandparents or relatives or anybody might say, I want to, put money towards college. We want to put in a savings account so that they can, afford it when they come down to it. But what parents and grandparents don't realize is that, like we talked about earlier, the student assets affect their EFC. So again, assets held in a child's name are assessed at either 20 or 25%, depending on the college, versus a 5.6% for the parent. So just for rough numbers, if you have a child who ends up with $20,000 in a savings account, and you leave that in that student savings account and fill out that FAFSA accordingly, you will possibly raise your EFC by $4,000 to $5,000. So you really want to make sure that you're avoiding that at all costs. The next one that we see is that grandparents, maybe they're not giving the child money and saving, but they want to help pay for college, and they start sending the money directly to the college. What happens is that the funds get received by the college. The college is looking at this and they say, who is this check from? We don't know who they are. So the universities only know who the parents listed on the FAFSA are and the student. If funds come from somebody else, they don't know what to do with it. So what happens is it gets treated as student untaxed income, and that's going to be assessed at 50% when they're determining your EFC. So if you keep adding up these mistakes year after year, and grandma keeps sending those funds over there each year, you're going to be increasing the EFC because if grandma were to send the money to the parent and the parent pay the school, though that doesn't really raise any red flags, they're assessed at a lower rate than they would be if they go directly from the student. So just that little small mistake can also cost thousands of dollars year after year. Another one we hear about, and I see all the time, is that families want to pay for college by taking distributions from IRAs or 401ks. So a lot of times we hear that, well, hey, the government's waiving that 10% penalty. And that's great, but the colleges don't care. you're not getting a break from them, right? All of that funding shows up, all your distributions that you're taking out, that's considered income by the college, and it's going to be assessed at 47%. So each time you take out each year, it's going to show up as income and kind of keep raising that EFC. Same thing with Roth money, right? Some people think that we'll be able to do that, but again, the school doesn't care. It's going to be untaxed income, and it's going to have to be included on the FAFSA. So just really want to pay attention and watch out for those things. And finally, the last one I'll touch on tonight. And again, I'm touching on 4, but I can make a list of the 26 biggest mistakes, but time doesn't allow for us to get into all of them. But we talked about this one earlier, and it's not using the appeals process. And I think this can be the biggest mistake of all. Basically, I've had students come in, they're seniors, they've got another semester left, and they're like, hey, I'm out of money. I don't know what to do. And I'm like, well, walk me through your situation. What happened? Well, my dad lost his job 2 years ago. Okay, where were you 2 years ago, right? If you'd have told me about that, we could have, kind of taken this appeals process, but we can only do it as far as you let me know. So if there's any changes in terms of a loss of job, a reduction in income, a reduction of hours, a bonus that you didn't get, any of those things as a parent, talk to the financial aid department about it, because they can make adjustments and say, again, we don't want to look at 2-year-old tax information. We want to look at today's information. So it's really something now more than ever. The appeals process really needs to be utilized. So keep your financial aid office in the mix. Let them know that situation. Don't, a lot of parents I see, they've got too much pride and they don't want to come in and they don't want to, air their dirty laundry. Air all the dirty laundry you can in the financial aid office, because it can do nothing but help you.
Yeah, Matt, you mentioned appeals earlier when we were talking about coronavirus. I don't know if you mentioned, but the FAFSA uses 2-year look back on income. So for 2020, 2021, they're looking at your 2018 taxes. And now with the coronavirus, that's 2 years ago. You could be looking at a very different financial aid situation right now. If one parent lost their job or an income got decreased or anything like that. So all that's to say, appeals, I think, are even more important now, more than ever. And Billy Joe, I know that you have helped a lot of our clients through the appeals process. So can you kind of tell us what that looks like and how to go about it, and maybe give us an example if you have one?
Yes. And just as Matt and Teddy just now touched on, there's going to be a change in your financial situation. So that could be something that you would appeal to the financial aid office based on your need, what sort of need you have, and your need can change, especially recently. So again, they're looking at old numbers. If you're going to college this fall, your numbers that they're basing that off of is 2 years old. And then if you're going to 21, they'll be looking at 19 numbers. And again, those are also pre-corona. So that could have changed. Now, when it comes to special circumstances, it could be anything basically that's changed your income, increase your expenses or decrease your income. You're going to want to ask for more aid. And it could be other things other than just the corona pandemic related. It could be a change in your marital situation, if you've recently been divorced, any unexpected costs that have come into the family. And that's need-based. That's going to be financial aid, and then there's also merit. So it doesn't hurt. You don't always have to have a change in your financial situation in order to ask for more money. You can ask for an appeal anytime, and it doesn't hurt. Nothing's going to change in your original financial aid package if you ask. The worst they can say is no. And this is a great time to ask since there's been so many changes. But again, if you don't have the need base, you can also ask for merit. And I just had a successful one a few weeks ago, merit-based. The student was already accepted, already received the presidential scholarship, so already on the top of his class. And it was a single mom, and even though she was high income, so there wouldn't be any need-based to ask for. There'd been no financial situation changes. But since he was already in the top, entering 20% of his class, he asked for $2,000 more, and he got it. So that's another thing. When it comes to merit, you kind of want to ask for a specific amount, and you want to be reasonable. Usually you ask for a few $1,000s more. When it comes to need-based, you're not necessarily going to ask for a specific amount. You can just throw in your numbers, and then they're going to review it. They're going to go by professional judgment, and they're going to make a call on your situation. So And you got to keep in mind too that with the virus, with the coronavirus, there have been some changes. So just because if you have a decrease in your income, there's a very good chance they're going to make an adjustment to your financial aid package. If you haven't, it could be a little bit more difficult to appeal. And the reason is you got to remember that many colleges have just issued huge refunds on housing and meals. A lot of their endowments are wrapped up in the stock market, so a lot of them are struggling financially. There's been a significant drop in enrollment numbers. Now, that could go both ways. They could offer you a better package because they want to keep their freshman enrollment up. And at the same time, they're going to be tighter on money because they're going to be dealing with people with the financial issues from the pandemic first. So right now is going to be a tricky time to be asking for appeals. It can go one way or another. It certainly doesn't hurt to ask, and you should definitely give it a try.
Yeah, and I think that's a good point too, Billy Joe, to make that trying to make sure you've got the right verbiage and how to ask for things and what to do can really make going for a successful appeal a lot easier, right? So kind of using that lingo that the financial aid offices know. But even after you've got the successful appeal, I've got students in my office every week that are like, okay, great, I still don't have enough money, right? I've maximized all the things you're willing to give me and all the reductions, but I don't know how else to fill this gap. And a lot of times we're looking to fill that with student loans or Parent Plus loans. Teddy, again, being the published author on these and knowing the ins and outs, what are some of the strategies that parents might look at for a student loan or a parent loan versus a private loan, for instance?
Yeah, great question. So when it comes to student loans, there's two main options. There's federal student loans and private student loans. Most student loans are federal, and those you apply just by filling out the FAFSA. So just like you fill that out for scholarships, Pell Grants, everything else, that also puts you in the running for federal student loans. There's parent federal student loans, which, as Matt mentioned, are called Parent Plus loans. And then there's student loans for the student. The problem is federal student loans, for students, there's a maximum amount you can borrow every year. And that depends, but it varies based on a couple factors, but usually students can't borrow as much as they need a lot of times. So that's when there's a question of, should the parent take out some parent loans on top of that, or should we look at private student loans? My recommendation is always to go with federal student loans. There's a lot of reasons for that. Federal student loans have more repayment benefits in short. So when it comes to repaying your student loans, one great option I recommend is income-driven repayment plans. So this is available for students as well as parents with Parent Plus loans. You can sign up for these income-driven repayment plans, and your monthly payment will be a percentage of your income. So for the students, it's great if you're on your entry-level salary. Maybe you can't pay your full monthly payment right away. This gives you a way to just pay what you can. It's for students, it's 10 or 15% of your income. And that way you're still making payments towards your student loans. They're still in good standing, but you're, again, making sure you can afford your monthly payments. For parents who are also eligible for this, except the monthly percentage, it's 20% of your income. For parents, the strategy that we recommend is if there's two parents in the household and one parent has a lower income, or maybe one parent doesn't work, we recommend that parent with the lower earnings takes out the Parent Plus loan. And the reason for that is because you can apply and have the monthly payment be based on the lower earning parent's income. So you can get a very low monthly payment that way. Even with those options, definitely limit student debt as much as possible. None of these government programs. Another one that you hear about a lot is public service loan forgiveness. It offers forgiveness of student loans if you work for the government or a nonprofit for 10 years. So that's a great thing to keep in mind if you're planning to go into a public service job, be a teacher, anything where you're working for the government. But even with that, you don't want to go and take out like tons of loans because, hey, I'm going to get them forgiven. Don't be willy-nilly about it, because if you look at the news, there's problems with these programs all the time. So while they're a good resource, you should still borrow cautiously. The last thing I'll mention briefly about private student loans, they are an option if for some reason the parent doesn't want to take out Parent Plus loans. But for private student loans, they do require a credit check. So the nice thing about federal student loans is students can take them out regardless of credit. Interest rates are really low. For next school year, interest rates on federal student loans for undergraduates are 2.75%, which is lower than they've ever been in history. For Parent Plus loans, they're about 5%, which is higher, but still lower than they've been in past years. And students can get that without a credit check. But on the private side, they check your credit. Your interest rate varies dramatically depending on your credit. So anywhere from 4% if you have good credit to almost 15% if you have bad credit. A lot of 18-year-olds don't have any credit, and so they're not going to qualify without a parent cosigner. So in some sense, the parents got to be involved in a lot of ways a lot of the time, whether they're co-signing or taking out a parent loan. So I'll leave it at that. Happy to take any questions from the audience on student loans or anything we've discussed tonight, scholarships, the EFC formula, any of the mistakes that we've talked about. Feel free to now put questions in the chat. I know we had a question earlier about how do I find scholarships that best fit my daughter. I think we've somewhat touched on that, but while we wait for other questions to come in, Shane, do you have anything else to say about finding the right scholarship for you?
As I mentioned before, I think that even for seniors, parents with senior, go ahead and look at fastweb.com. FastWeb's really nice because you put in the information based upon your child, and then it'll give you scholarship opportunities that will apply for your child or that your child can apply for. It will also send it to their phone, which is the key, because if you send it to their phone, they'll get it. If you send it to their email, they may not, because they don't always check their email anymore. And then again, go back, check the Chamber of Commerce, and go back and check the school website, the university website, and the college within the university. So look on the University of Iowa's website, and then go ahead and look at the College of Nursing at the University of Iowa and see if there's any scholarships on there. And keep looking. A lot of times at the university level, there's more scholarships available once they are in the university, enrolled in the university for a year, than there are when they are incoming as freshmen.
Okay, thanks, Shane. Hopefully that was helpful. I don't see other questions in the chat right now. I'm guessing a lot of you probably have questions that you, a question came in. Do banks give low interest loans for college? Not really. Again, with banks, it's credit based. So if you have good credit, you can get the lowest that they offer, which is based on the market. It's always changing, but right now I think it's around 4%. Even for student loans. So it's not like they're being nicer because you're going to college. If you don't have good credit, your interest rate could be up to 14%. I see this person's asking a couple other questions. Unfortunately, we have to wrap it up, but this person and anyone else who has questions, the best way to answer them is to get them answered, is to sign up for the 2 one-on-one options that we're offering, which are free for your attendance tonight. I'm gonna go ahead and share in the chat a evaluation form, and on the last page of that evaluation form, it's a quick form. It's gonna give you this option to sign up for a free 15-minute phone Q&A session or a free 1-hour financial aid conference. Again, the 1-hour financial aid conference, we will give you 3 college reports, which are the ones that Matt went over, those examples. It'll be based on your family's financial information and your top 3 colleges. So to sign up for these, again, the link is in the chat. I'll also email it out. And you can also just click directly on these links that are in this form, and it takes you straight to a calendar, and you can choose a time that works for you. And then someone from our team will call you at that time. So again, I highly recommend it. Again, it's free. It's no strings attached. Thank you so much all for coming. We hope to hear from you again to kind of follow up with you more one-to-one, talk about some of those questions that people are asking now in the chat about home equity loans and other options. There's endless amounts of information on this. So encourage you guys to follow up with us. Again, I'll follow up with you via email. And thank you all so much for coming. Have a great evening.
Thanks. Bye.
Bye.